So by now, I think you've probably heard of China Evergrande. This is basically China's second largest real estate developer, and it's on the brink of going bankrupt, right? So basically, even if you've heard of it, maybe you want to stay for this video to get a different perspective. And if you haven't heard of it, I'll be covering this and also the Federal Reserve meeting coming up in 2 or 3 days, right? So if this is your first time watching my channel, welcome. I cover all things personal finance and just investing and all that, right? So basically, before I get into it, I need a quick disclaimer. So none of this is financial advice. All of this video is just my opinion. So read the disclaimer, do your own research before making any decisions or any financial decisions, right? So first of all, will Evergrande's collapse lead to a stock market crash, right? So basically, a lot of people are saying, oh, Evergrande, the China's second largest real estate developer, is going to crash, means the whole market is going to crash with it, right? So let's look at it and debunk it a bit, right? So snowed under its crushing debt of 300 billion, Evergrande is so huge that the fallout from any failure could hurt not just China's economy, right? So basically, CNBC says the contagion could spread to markets beyond China, right? But basically, I didn't highlight it because basically they didn't talk about anything beyond China. So yeah, that's why you might want to dig deep into all these articles and really read, right? Because they might just put headlines which are not exactly accurate, right? So Evergrande's collapse will be the biggest test that China has faced in the financial system has faced in years, right? So yeah, this is definitely true because what people are comparing this to is if you don't know, the 2008-2009 Lehman Brothers collapse, right? And you can look at the stock, it's been absolutely hammered this year, right? So this is just 1 year and it's down about 70% in 1 year, right? So it's actually it's down 80% this year. So what do they do is basically they develop real estate in China, and what's happening is basically they have over leveraged themselves and they might be collapsing, right? So who's the most likely receiving end of the short end of the stick here, right? So probably banks, home buyers and investors, and the last one is also suppliers, right? So I go through this in a bit more detail, but basically this is the key important question, right? Is Evergrande too big to fail? And the government is likely to step in due to how important Evergrande is. So I can show you like 10-15 articles which everyone is saying. So these are all American publications and they're all saying that Evergrande is too big to fail, right? Because they've been through Lehman Brothers, so they think that now China's government will step in and basically just put a backstop to it, right? Which remains to be seen. So honestly, my opinion is that they are not going to put a backstop to it. And you might see some reasons why later. So basically, this is a stock from July 2020. It's been absolutely destroyed, right? So it's down about 90%. So yeah, not too good holding this stock, right? So yeah, sorry, let me go to the next step. So basically I already covered this. So looking at the stakeholders, right? Investors, bondholders, consumers, creditors, and banks, right? So I think the CNBC article didn't really cover bondholders, and I think this is actually the biggest part, right? Or maybe they just include banks as the bondholders. So I just want to first look at all the US stockholders and why I feel that this headline is basically inaccurate, right? Contagion could spread to the markets beyond China, right? So basically, I feel that this is not a good headline, right? So because if you look at all the US funds, right? So these are the top US funds that hold this Evergrande shares, right? And I can just show you the amount that they hold, right? So this is what, 18 million, let's just use 19 million times. So I'm going to use the full price at that time. So basically it's 475 million Hong Kong dollars, which is about give or take 7.5. So you divide it by 7.5. And basically their full stake before this 90% collapse, right? Before this whole 90% collapse was basically $63 million only, right? So you might say, wow, 63 million, that's a lot of money. But honestly, and this is Vanguard, right? This is the largest one, right? And honestly, it's not really that much because Vanguard has $7.1 trillion in assets under management, right? So when you take it on a relative scale, 63 million compared to 7.1 trillion, it's basically nothing. So yeah, that's my first point where I want to rebuke that, basically the contagion is going to spread beyond China markets, right? So yeah, that's the first point. So looking at banks and bondholders, I think these are very opaque information. There's no really a lot of information about this outside of the... Basically, there's no information, right, on all the bondholders. I tried to find it, I couldn't really find it. So if you can find it, leave a comment below, right? So yeah, I couldn't find any of the bondholders, but thumbs up for the effort. If you can, smash a like button for me, right? So, but the bondholders and the banks are the ones that are really going to be heavily affected because it's 300 billion of debt. But I watched a video the other day. I don't know which publication it was, but it was a reliable publication, and basically it was said that most of the debt is held by Chinese banks and basically China's side, right? So it doesn't really affect the Western stock markets, right? But of course, yeah, I'll talk about that a bit more later, right? So basically, the investors, now I want to look at the investors, and basically the largest investor holding about 70% is this Hui Ka Yan, which is, I think, which is the founder of the company, right? So not really many people holding a huge stake, right? So the stock being wiped out is not really a big deal to the Western markets again, but of course it's a big deal in China, right? So I'll talk about that a bit later as well. So it's the Federal, if you want to read that, if the Federal Reserve to taper. So basically, the Federal Reserve meeting is coming up in let's call it 2 days because I'm in Asia, so it's opposite of the US time. So basically 2 days. And why do I think they are not going to taper? So my gut feeling says yes, that they are going to taper, and I actually want them to taper. But looking at the data, I'm going to have to say no because of weak employment and lower inflation data, right? So basically, let's look at the consumer price index first, and basically it rose 5.3%, so that's quite high year over year as well. But of course, it's smaller than the 5.4% increase in July, right? And basically this plays into the whole Federal Reserve saying, oh, this is transitory. So this might reinforce what they are thinking, right? So it goes from 5.4% to 5.3%, right? So maybe they are saying, oh, maybe next month it'll be 5%, right? Year over year. So actually the second biggest point is actually going to be the jobs report. And it's only 235,000 jobs versus expectation of 720,000, right? So huge miss. Looks like growth is going down, right? So that might cause the Federal Reserve to basically stay the course of this easy monetary policy, reinforced by the inflation is going down, so we don't really have to worry about it. So what they might have to worry about is if it continues 5.3%, 5.4% for the next few months, right? So then they might have to pull the levers, right? So in my conclusion, there are many headwinds for the financial markets in the coming months and potentially years, right? So in my opinion, Evergrande's collapse will not influence heavily the global markets, right? So why? Because I've already showed you most of the bondholders and most of the stakeholders are basically in China, right? But of course, China is the world's second largest economy. So a lot of things might be heavily affected, such as like those people who produce cement or iron or things like that, right? So they might have lower consumption of those things, which may lead to those companies in turn being affected, right? But it will definitely shake confidence, because if China allows them to default and basically collapse, right, it will really shake the confidence of the global equity markets, even though there's no I would say there's no material downside aside from all the material suppliers and all that. So that is another one downside lah. So which may change sentiment, right? And we know currently if you look at the S&P or whatever it is, there's nothing to do with fundamentals. It's all to do with sentiment and low yields everywhere, right? So, but probably will not have material impact. So Fed taper will definitely affect global equities, right? Because we know that most of these greenbacks, these US dollars, are basically held by a lot of countries and companies outside of the US as well, right? So yeah, that's my overview for this week. So I only make one video a week, right? So yeah, with that being said, that's all I wanted to share this week. Thank you very much for watching till the very end of the video. If you did enjoy the video, smash up the thumbs up button, smash the subscribe button, and press on the bell notification and press all. And do leave me a constructive comment, right? Any constructive criticism or any positive feedback will be much appreciated. And with that being said, thank you very much again for watching till the very end of the video. Have a fantastic day ahead and peace out.